Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is a sunny Friday here in Santa Rosa, California. I have, as I mentioned in the last episode, I've moved down here for 1 month. And, Washington's great. It's nice and green up there, but you really cannot beat the sun. I absolutely love having sun, especially in January when Washington, we don't know what sun is during January. So it's a good day, and it's a good day for a second reason because we have Josh Guggenheim with us from Gold Leaf Farming. Josh will help us understand a little bit more about a unique kind of specialty investing in farmland, which, is kind of all the rage in the headlines. You always hear about Bill Gates buying 10 billion, acres of farmland. And so I'm sure this will be interesting. Josh, thank you very much for hopping on the show.
Yeah, thanks very much for having me.
All right. I told you before we got on, we hopped on that we like to start with stories. I'm sure you got a good one. So why don't you take us to the beginning of your story in real estate? How'd you get started?
Hey, good question. So I actually haven't done real estate my whole career. I was actually more in kind of the small business private equity side. First, I worked at a bank, Deutsche Bank, and then I worked as a private equity consultant, and then was working for a firm called Lightview Capital doing kind of lower middle market buyout. But on the side, I kept seeing people doing quite well in real estate, through apartments or buildings and industrial, and always was kind of interested in, wow, it seems like a lot of people I know who are in their 60s or 70s made, a lot of money, seven-figure sums doing real estate, not even professionally. So I was always interested in it on the side, and actually took some money and bought a few apartments in actually Philadelphia, of all places.
Okay.
And then bought another one in Sacramento, just personally, and really got into real estate. At that time, I was kind of looking for other opportunities and came across Gold Leaf and farmland investing. And that was interesting to me because farmland investing is really a mix of real estate. We're buying the real assets, but it's also got an operational component too. You've got to manage a farm, you've got to manage a team, you've got customers. It's more operationally intensive than, just setting up a building and leasing it out to someone else. So essentially, I joined Gold Leaf with the goal of working in farmland investing, with the idea that farmland investing is really a mix of real estate and, operating, kind of my two interests, my two passions. So that's really how I got into it. It was more, operating in the beginning, a side passion for real estate, and then combining the two with Gold Leaf.
So why, there's most of real estate has an operational component. The only one that doesn't is really just buying straight up land. And so, having an interest in the operations, that doesn't satisfy me enough. Why specifically farmland? Because that is a
that's a good point. I would say the opportunity is pretty big. So there are a lot of parallels, I would say, with farmland today of, let's say, manufactured housing 20 or 30 years ago, or self-storage 20 or 30 years ago. If you look at U.S. farmland, it's a big asset class. It's I think it's 2 or 3 trillion in total. Combine that with multifamily, which is 4 or 5 billion, so relatively large, but it's only one or two.
I'm gonna pause you there. So farmland, you said, is 2 to 3 trillion, and
in multifamily
is
4 to 5 trillion. Excuse me.
Interesting. So farmland is multifamily is double what farmland is.
Double farmland. In office is about, I think, 2 to 3 trillion. So farmland is about the same size as office. So relatively large, albeit, let's say 40% less than multifamily, but pretty large.
Okay. Interesting.
And it's only about 1% owned by investors. So there's a lot of opportunity out there that's really mom and pop owned. And that's a little different, I would say, than self-storage or let's say manufactured housing today, where there's a lot of investor interest in it.
Mm-hmm.
With more investor interest, prices go up, processes get more competitive. There's less low-hanging fruit, if you will, to improve assets.
Mm.
Those still exist with farmland.
Right.
So I would say, if I had done this 15, 20 years ago, there would have been a lot of asset classes that are interesting, manufactured housing, maybe strip malls, various others. But those types of opportunities that existed in those asset classes 20 years ago exist today in farmland.
Makes sense. Yeah. So farmland, I'm just kind of I'm scraping my head or scratching my head here because when I think of it as investing in real estate, I'm just curious how it actually goes down because there's a lot that you need to know about farming. I feel like about things that have nothing to do with real estate in order to invest in farmland. So what are just take us through your investing strategy. What is it that you look for? What are the returns you're looking for? When you buy it, are you leasing it out to a farmer or are you actually farming the land yourself by creating your own, team? Take us through the strategy.
Yeah, good question. So we do at Gold Leaf kind of two different strategies. One is we're buying existing farms and holding them for kind of 10, 15, 20 years. We're really focused on cash flow.
Mm.
That's probably 80% of what we do. 20% of what we do are developments, where we're buying bare land and then creating a farm and then selling. Those tend to be shorter holds. But in our core strategy, how it works is we'll see a farm for sale, and the real goal is to generate, let's say, kind of 15% returns in total.
Okay.
12% on average are driven by cash distributions. And then on the back end, there's 3-4% from appreciation. So it's a cash flow focused strategy. So if you think about, which farms are going to generate, good cash flow and be kind of secure, there's a few things that are important. The first one is yield, actually, and that's literally crop per acre. So some farms, for example, let's talk about almond farms for a second. They'll do 2,000 pounds per acre. Some will do 2,500. Some will do 3,000. It's really important to focus on the ones that really yield higher, I would say, for two reasons. One, they generate more crop, but then also you end up having a much better cost curve. Every farm, let's say almond farms, every almond farm costs more or less the same to farm. So if you have one that, let's say it's $3,000 per acre to farm, if you buy one that generates only 2,000 pounds, you'll have a $1.50, cost of production. If you buy one that generates 3,000 pounds, you have a $1 cost of production. So your margins are just much, much better. So for us, a good farm is like high yield and low cost of production, good margins. And the second thing is water rights. So as you might actually know, now down in Santa Rosa versus Washington, Washington and other states like that have
plenty of water.
Let's say infinite water, maybe too much water. That's why you're down here. California doesn't. California is broken down, however, into about 200 plus different water districts that each have different rights to rivers and waters and canals, reservoir storage, different groundwater situations. So for us, it's really important to target, let's say, the best third of water districts in the state because that water is more secure and that water is more, I'd say, it's actually cheaper too. And frankly, we hear a lot about a drought in California. In the last 2 years, we've actually had excess water on our farms and we've sold it.
Oh,
so long story short is, in addition to kind of the real estate angles, if you understand water and you understand kind of good cost of production farming and buying in the right areas, that's going to differentiate the great assets from just the okay ones. Your last question was about operations. We do have an in-house team that does the farming on 90% of our properties. That's different. Most farmland investors lease it out to third parties. We wanted to be a little bit more operationally hands-on. We think, being operationally hands-on gives us a little more control, but then it also helps us actually diligence the assets better. because the person who's looking at the farm is an actual farmer agronomist, not some guy in, Wall Street or something looking at an Excel model. So
yeah, that makes sense. The thing that I would be most worried about, especially if I myself were looking at buying farms, is I know nothing about farming. And so I feel like it really comes down to very specific knowledge on like the type of crops that make sense. How do you even decide what what crop to be buying? Yeah, I'm assuming you guys
yep.
have to follow the markets in term from a crop by crop basis. Peanuts, almonds, apples, what you name it.
Yeah, so good question. So we have more of a concentrated philosophy where we only want to buy crops that are, I would say, we'll say supply constrained, so they can't grow everywhere in the world. So, for example,
Okay.
we would never buy wheat or something like
Citrus
that.
and
Or that can grow in multiple states, multiple continents. You know, obviously, a lot of the row crops are the same way. We have, for example, we have multiple almond farms. 80% of the world's almonds come from California. The
no
yields
shit.
are
I
the
did not
highest
know
here. The
that.
cost of production is the best here.
Huh.
There's some pockets in like Portugal and Australia, but not that substantial. So we focus on almonds. We have a lot of pistachios. Pistachios only grow in California, Iran, and Turkey. And
Hmm.
the average yield in California is about 2 or 3 times better than Iran and Turkey, which unfortunately don't have good water resources.
Hmm.
Um, we have one wine farm and one medjool date farm.
Okay.
But I think our focus is really have a concentrated focus on these crops that are supply constrained. And then more importantly, we only want to buy crops where the guys on our team actually have experience farming them. Every farm is different. You can't really, if you're a good almond farmer, you can go farm wine grapes, but you won't be as good as someone who's been doing that for the last 10 or 20 years. So we're lucky that we are focused on these, supply constrained crops, but also we've got the in-house talent. We This is a little different. There's some other folks out there, other investors that like to, I'd say, invest a little bit in a lot of different crops. That is interesting from a, I would say, risk diversification perspective. You have less focus on the pricing of one crop or the yield variation of one crop versus another, but you lose the kind of the macro angle and the expertise. So there are pros and cons, but we focus on the former.
And this might be my own, naivety when it comes to farming, but I've only heard, crop-based farms. I haven't heard anything about cattle or anything like that. So you guys, you don't buy, dairy
Yeah,
farms
no livestock for us.
Okay.
Although we do have one farm that had a cattle lease on it, and we would be paid not in dollars, but actually in like 1 or 2 cows per year, which was pretty funny by some local ranchers. But no, not our thing. Maybe in the future, who knows? But no livestock yet.
Yeah, it's in here in Santa Rosa. My Valerie, my partner is she's from here, and their family when they were really young, they bought them cows, and those cows have
Okay, now yeah, similar.
continued to pay out because they keep having babies, and it's interesting to think of that
You
being
know what to do for Christmas 2024. Then that's good.
yeah, there you go. Cool. So take a perspective of somebody who is just getting into real estate and they really like the idea of investing in farms. How do they get into farm investing? What are the first few steps they need to take? And then how much money do they actually need in order to get started?
Yeah, good question. So we have, I guess it's 3 funds now. One, they are funds, but you can look at them as actually more holding companies owning a bunch of different farms each. One of those is open. It's called Goldleaf Farming LP, where we're continuously taking in investments. Um, in a deal like that, we'll take 50 or 100 grand into the fund. And if someone were to invest into the fund, they would get immediate exposure to all of the farms that we already own. And then as we grow, we'll add farms to that entity, and they get exposure to those. That's one way folks could do it. Another way, there are some platforms online that allow people to kind of pick specific farms here and there. Like Acre Trader would be one. That's another way people could do it. They have a little bit of a different model. But if folks are interested in kind of the gold leaf, you know, uh, holding company approach, the best way to do it is just to find us online at goldleaf.ag and reach out. And we have some larger family offices, we have some larger RAs, but we also have smaller individuals in the fund too. So it's with a relatively small amount of money, you can get exposure.
That makes sense. And I'm assuming you would not recommend this strategy for someone to go buy their own farm.
I would not. It's pretty, if they have great farming expertise and they love being out there, they should definitely go for it. If they don't, then I wouldn't recommend it. It's a tricky business, I would say, and relationships are pretty important. So I would not want to be someone focused on out of state, buy their own farm in a different state, and then have someone they've never met manage it. There's a lot of opportunity for error there. I'd go with more of a professional management fee and make us work for our fees, if you will.
Makes sense. All right, man, that wraps up the initial section. It's time to jump into the quick question round. Are you ready?
Perfect. Yep.
Let's do it. Starts with education. I need 2 recommendations. It could be a book, it could be a movie, it could be a YouTube channel, whatever. Just give me 2 of them. One for general life wisdom, and then one for real estate specific.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Interesting. Okay, I would say this could actually be a book for both of them. Am I Being Too Subtle by Sam Zell is pretty excellent, actually.
Mobile home guy.
Obviously, Sam Zell, Equity Group, huge real estate investor, huge business guy. Interesting book. Highly recommended, and has a lot of life lessons too.
Cool. It's a good one. I meant to, I own a couple of mobile home RV parks.
Okay.
We're actually under contract to buy another one here soon. And I've never read that book, but I've wanted to because he did Sun Communities, and they own. I think he made most of his money in mobile home parks, and I'm sure he has some interesting stories.
Yeah, and I mean the one of the core messages is his dad told him he's basically an idiot or not focused on the right things. Because he was the dad was only focused on Chicago, very fancy Class A real estate. And Sam Zell said, no, I want to do student housing and I want to do mobile home. It doesn't make sense to buy Class A if you're getting it at a 4 cap when I can buy this other stuff at a 12 cap.
Yeah.
And the dad said, no, that's not what we do. And he said, no, that is what I'm going to do. And sure enough, 40 years later, and X billion later, he made the right choice. So that's right.
All right. Next question is for your younger self. So let's go back to the Josh, who was just getting started so many years ago. Go back to him, look him in the eye, give him one piece of advice moving forward.
I would say that don't underestimate the power of personal connections. In college and high school, you're always focused on academic work. And the older I get, the more I realize that the academic strengths need to be there, but the people who really get ahead have excellent personal relationships. And value, I would say, emotional intelligence just as much as academic intelligence.
Yep, absolutely. All right, next question is an interesting one for you because it is about the U.S. There's a lot of opportunity out there. Big place. Give me the single metro or the single area, I guess, for you that you're most excited about investing in today.
For us, we do a lot in the Central Valley. I would say
That's California, right?
in California, Central Valley, California. Uh, I think Bakersfield is actually a pretty interesting city. It's a city that, frankly, didn't have a great reputation in some circles, but
Yeah,
is
I've Val's family kind of talks shit about Bakersfield.
right. It doesn't have a lot, didn't have a lot of opportunity. I mean, that's frankly a good thing because people in LA or San Francisco would be like, oh, Bakersfield isn't great, but it's actually a very business friendly opportunity. It's emerging as kind of a logistics hub. And Southern California has gotten so expensive in the past, let's say 5 years with housing. I think it's going to continue to see a lot of people moving from LA, Inland Empire, San Diego, people who frankly got outpriced of those areas to Bakersfield. So that would be kind of I would say, a contrarian metro, maybe less sexy than Austin or Nashville or something that you hear on this. But I like investing in these areas where the relative value is really high compared to the other closest metro.
Yeah. Well, yeah, I mean, once a market's hot, then it's no longer a good deal. So you got to find these metros that, people aren't flocking to. All right, next question is lost my spot. What is the next question? Oh, it's about finding deals. It all starts with getting in contact with the seller, hammering out that purchase agreement. So what is your favorite way to generate leads and find good deals?
Yeah, good point. So we have a ton of brokers that we work with, and I mean that it's not very sexy to say it, but I would say my sense is that a lot of potential buyers to brokers are extremely unprofessional. So if you can work with brokers, and this is really the case in farmland too, and I would say in the small, like the more niche the asset space, the more unprofessional many buyers are. So if you can differentiate yourself as a true professional buyer, pick up your phone, email back within 2 days, ask smart questions, not create a bunch of extra work, you'd be surprised how far that goes in regards to brokers. And it might not work on the first deal that you see with them, but the next time they have something on their book, they're going to reach out to you first. So don't underestimate how far professionalism goes with brokers.
Yep. That goes back to relationships. It all comes back to relationships, especially in real estate. And that leads us to the second to last question. This is about lessons learned. Not every deal we do goes the way we expect it to. A lot of times things go sideways, but in those opportunities are some good lessons that we learn and we can bring on to the next deal. So what was a deal that went a little bit sideways for you, and what was the lesson you pulled from it?
Yeah, good question. I would say, I think early on we had a couple pistachio deals actually. And let's say the pistachios were yielding at 2,500 pounds per acre, which is not that great. And we brought in a bunch of advisors, and they said, oh, I'm sure these pistachios can do 3,000 or 3,500 pounds per acre, even though the historical average of the farm was only 2,000 or 2,500. So we did all the underwriting and said, oh, we're going to price this thing assuming it can get 3,000 or 3,500 pounds. We made the deal, we closed on it. And since closing on that, the yields have never gotten to 3,000 or 3,500 pounds. We've done the best we can with farming. It's an okay farm, but it's not great. It's underperformed what we'd hoped. So the lesson there is, I would say, be very cautious in regards to paying for underwritten operational improvement. Like you could do a little bit here or there, but something really substantial. It's really easy to get yourself. You hear a lot of investors out there saying, "Oh yeah, the past seller was no good. We can improve this. There's all this easy stuff to do," and that stuff does exist, but it's sometimes it just doesn't exist. And don't convince yourself around how easy operational improvement is, and don't pay up for it.
Yeah. Yeah, I think that's really good advice, especially, well, I mean, it's not even specific to farming. It's to everything you do in real estate.
Oh yeah, I mean every broker is going to tell you, oh, you're going to double rents within the first 6 months. I rarely see it. So
Lesson one: never listen to pro formas.
yeah,
Yeah, it's so easy to get kind of caught up in a hype train when you're underwriting a property and you're like, oh, this could reach the moon. You could
absolutely.
double the rents, but you got to be conservative. You got to understand that a lot of times there are things in play, especially when it comes to the market, that you really cannot change. And even if you want to, get 100% occupancy, you're not going to get there. So
yeah, no, and I find it can be a slippery slope. We're pretty good at checking ourselves, and we have a full team, but if you adjust one assumption, then another, and pretty soon you're out of whack. So be conservative.
Yep, absolutely. All right, that leads us to the final question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you, learn a little bit more about what you guys do over there at Goldleaf. So what is the best way for people to reach out and get in contact?
So the best way to reach out is email. So it's josh@goldleaf.ag, or you can go to our new beautiful website with great videos of our founders, goldleaf.ag. It's Goldleaf Farming. And just shoot us an email. We're happy to make time with anyone. And if it's a small check, that's great. If it's bigger, also great. But also I'd say if you're interested in farmland eventually, but not this moment, that's okay too. We should set up a call. And I'd say in general with these real estate, any investment, when you get it, take some time to think about it. Don't sometimes there's pressure in your inbox, and when we have our investors, we generally like to talk to them, get to know them for a couple months, and then when the time is right, do it. Rushing doesn't work for either. So if you're interested, reach out to us and we'll explain more.
There you go. And you guys should check out their website just to see the website, because it is definitely beautiful. Whoever did this website for you guys, kudos to them. They did a great job. All right, so that wraps it up. Josh, thank you very much for hopping on the show.
Awesome. Well, no, thanks very much. And I've done a few of these, but actually, like the questions were much better with yours than most of them. So I appreciate it.
Awesome. Yeah, appreciate that. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe with realestateinvestingclub.com. If you guys want to support the show, all we ask, give us a like, subscribe, share, all that jazz. Other than that, I hope you have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.